We turn now to the story of what happens when a bank's insurance system fails. Last week, government regulators warned that the federal bank insurance fund could run out of money by the end of the year unless something's done to build it up. These days, anyone looking for an extreme example of what happens when a deposit insurance system falls apart need look no further than the state of Rhode Island. Business correspondent Paul Salmon did that and has this report.
Today, now, on behalf of all the depositors, especially the small depositors, I am declaring a bank emergency in Rhode Island.
On New Year's Day, Rhode Island woke up to this announcement. The state's bank insurance fund was broke. The deposits of 300,000 Rhode Islanders were frozen in a state of only 1 million people. It's a nightmare from which many Rhode Islanders are still trying to awake.
The loss is unimaginable. I don't even want to discuss that. It's just not worth discussing.
Retired dentist Andrew Manikis' life savings, $350,000, were in this Rhode Island credit union. It was supposedly insured up to $500,000 by RISDIC, a private deposit insurance company. He switched his account to Davisville because it offered a higher interest rate than his federally insured bank.
As I recall, it was about 2%. For my total savings, about $6,000 a year, and that represented almost a 25% increase over what I was receiving. It seemed to make a lot of economic sense to me.
Economic sense. It's amazing. People still believe you can get higher interest rates without taking higher risks. But that's just wishful thinking. You get more interest precisely because you take more risk. And in this case, the risk started with RISDIC, a private deposit insurance company that simply wasn't government guaranteed. So it could fail. And it did, triggering runs at the banks and credit unions like this one, insured by RISDIC. Since these banks and credit unions made the usual bad real estate loans of the 1980s, the runs crippled them. The state of Rhode Island, too poor to bail them out, had to shut them down right after New Year's Day. Now, to us, this story is a parable of the 80s, where laissez-faire came to mean looking out for number one, investment meant speculation, deregulation, anything goes. In addition, this is one heck of a saga. The saga begins with one Joseph Mollicone, Jr., president of the Heritage Loan and Investment Bank. Mollicone seems to have been very well connected to the Rhode Island mob.
He's a one-eyed Jack. What you see on one side is not what you have on the other. Apparently, he was a prominent, successful real estate entrepreneur in the city of Providence and throughout the state. And yet, on the other hand, you had someone who simply used this institution as his own blank checking account.
There's been a lot written in the newspapers about organized crime involvement with Mollicone, Mollicone's bank, and so forth. What seems to be the connection?
Well, it's simply that organized crime has a very firm relationship with Heritage Loan and Investment and with Joseph Mollicone.
Mollicone was last spotted here at Boston's Logan Airport back on November 8th. He's unlikely to show up again anytime soon, since he seems to have taken $13 million with him. Money he withdrew from his bank, Heritage, by simply filling out other depositors' names. Of course, the deposits were insured by the Rhode Island Share and Deposit Indemnity Corporation, RISDIC, and therefore they seemed protected.
Rhode Island Share and Deposit Indemnity Corporation. Our commitment to protecting your savings is carved in stone.
RISDIC was security, trust, credibility, and after it paid out the Heritage depositors, a trifle low on cash, with less than $5 million to cover almost $2 billion in deposits. You see, this insurance company and its member banks were so chummy that RISDIC hadn't charged them a premium since 1985. If RISDIC had been responsible, this might just have been the tale of a petty mobster's rise and fall, starting and ending here at Heritage. In fact, something was rotten in the state of Rhode Island, namely RISDIC and the banks and credit unions it insured. By early December, word was leaking out. The new governor-elect assigned a man to watch the situation, Sheldon Whitehouse.
It was a very, very sensitive environment. The people from the Federal Reserve were in touch with us daily and were very concerned. So we wanted to make sure that there would not be runs, and because of the prospect of contagion, and there was no way that we could risk that.
Insiders had begun to pull large amounts of cash out of RISDIC institutions. Unable to stanch the flow or cover the losses, on December 31st, the RISDIC board met and voted to dissolve, prompting the governor's bank holiday.
Oh, man, that ain't good. I'm going to pay my rent. Damn. I'll be back. I'm going to get my money.
Like many Rhode Islanders, Jean Roy had assumed her money was safe. In November, she'd retired from the Army and placed all of her savings, $50,000, in the local credit union.
To be honest with you, I assumed it was insured. I mean, it's on all my bank accounts. There's a big sign on the door, insured, you know, and I never really thought about, I never realized that there was a difference between federally insured or RISDIC, that, it says insured. Insured to me is insured. I mean, I just never expected, anything like that.
When we first visited Rhode Island in the winter, the state seemed obsessed. From kids on the street to the local radio talk show.
Well, on the issue of the deposits, I think what is...
To impromptu public meetings, the topic was always the same.
I have $40,000 to $50,000 in bounced checks that the vendors all over this country are now saying to me, we gave you a week. You asked for a week, we gave it to you. We gave you 2 weeks. We gave it to you. Where is our money? Now, you have come down here. I have yet to see Governor Sondland come down here. Does he know the way to Wickford? Does he know where Wickford is on the map? I don't think he does.
Actually, Wickford's pretty easy to find. A harder job is coming up with anybody from RISDIC who was willing to appear on camera. But we finally found the perfect person, or so we thought, and we started off by asking him about the historic December 31st Board of Directors meeting at which the directors literally voted themselves out of a job. Right away, however, we ran into something of a snag. How long had you been on the board?
About 20 years.
And so what do your old friends on the board say happened at the meeting?
It was just a regular board meeting, and they decided to go into the conservatorship.
And does it make sense to you that they did?
I was not there at the board meeting. I can't say that. If I were there at the board meeting, maybe I could have participated in that decision. I was not there, so I'd only be Monday morning quarterbacking.
No, I'm trying to find out what you say to them.
I can't help you. I wish I could. If I were there, I would be able to tell you what their line of thinking was. However, I was not there, and I can't answer your question.
Another guy who missed the meeting was RISDIC's vice chairman, who happened to be, get this, the widely traveled Joe Mollicone, Jr. In other words, the insurance fund was run by the insured themselves. Vartan Gregorian is the president of Rhode Island's Brown University. He was asked to investigate the scandal and find out who RISDIC's directors really are.
These are honest citizens who became heads of their credit union, and then they became members of the board of Rhode Island Deposit and Share Company, RISDIC. And they were supposed to regulate themselves. And there was no custodian keeping, or guardian, keeping an eye on guardians themselves.
RISDIC didn't just overlook the shenanigans at Mollicone's bank, it was equally forgiving with all its member institutions. At Jean Roy's Marquette Credit Union, for example, only 3% of the loan portfolio met federal standards. And the RISDIC board secretly must have suspected it. What did these guys tell their father confessors when they confessed in church?
They said, Father, pray the nation's economy and real estate in New England won't go sour because we have our entire operation riding on it.
Unlike Joe Mollicone, most of the people running the RISDIC banks and credit unions weren't rogues. They just felt entitled, like so many in the 80s, to whatever they could get. It almost seemed at times like a welfare state for the well-to-do. The Mike Milkins, the SNLs, the people at RISDIC. And so long as this entitlement economy, if you will, kept spiraling upward and everyone kept faith, no one would get hurt. So when a young state legislator tried to blow the whistle here 5 years ago, he didn't get much of a hearing.
Whenever the fox is left to guard the hen house. You must admit that most of the, not most, I think all of the members, or many of the members of the RISDIC board are also serving in some capacity with the credit union.
Way back in 1986, before home video like this was refined, Frank Gashin warned of RISDIC's weakness and sponsored a bill to force all state banks and credit unions to get federal insurance. The hearing on the bill was chaired by Robert Bianchini, a part-time state rep who also worked for the credit union.
I would also submit that there are 13 or 14 extremely well-run private insurers in this country, and that RISDIC, in fact, leads the nation with the kind of deposit insurance and the kind of protection and the kind of leadership that they have provided over the years.
5 years later, Frank Gashin is a little grayer and a little wiser.
It surprised me that he would actually take an active role in legislation that sought to regulate the industry by which he was hired.
With Bianchini in charge, the Gashin bill never had a chance. In the entitlement 80s, the sky was the limit. The greatest fear, admitting the jig was up.
In cartoons, you often see a character walking off the edge of a cliff out over space, and it's not until the character looks down that he falls, and that's what happened here. RISDIC was off the cliff for years before everybody looked down, and then whoosh.
The point is, any financial system is based on its credence, its credibility. After all, that's what creditworthy means.
Go find a bank that calls itself something or other deposit and trust. That's exactly what credit is. You deposit and then you trust. And if the trust is gone, so's the deposit, and with that goes the bank.
If you get your money back, where will you put it?
Probably spend it.
Why?
Well, that way this won't happen again.
All young people should learn a lesson as to not to trust politicians, not to trust banks, not to trust anybody. And I hate to say that people should put their money under a mattress, but that's not a bad consideration.
Since the banks closed January 1st, some small ones have reopened with federal insurance, but most of the big ones remain closed, including Dr. Menikis' bank and Gene Roy's. The state is trying to come up with a plan to liquidate assets and return as much money as possible to depositors, but the loans are lousy, the state's broke, and Gene Roy is on food stamps. While the freewheeling entitlement 80s may no longer be with us, the chickens are still coming home to roost. There's the S&L crisis, of course, and now RISDIC, but is that the end of it? Not necessarily, as you may have noticed. On Friday, the head of the General Accounting Office, Charles Boucher, served notice that even the Federal Bank Insurance Fund, FDIC, is at risk.
But next year, unless the fund is rebuilt, it will almost certainly be insolvent as more troubled banks fail.
In short, the credit boom of the 80s is behind us. But the credibility crisis of the 90s is far from over.
When can I get my money? I don't want to read that. When can I get my money?